Salesforce upbeat long-term outlook providing a ray of light in this gloomy market. Welcome back, investors, to Ticker Time News. I'm Adam, and with shares trading at their lowest level since the early days of the pandemic, down nearly 53% since reaching its peak in November of 2021, it's trading today at $147 a share, which is below its high in December of 2019. Even before the pandemic began. So Salesforce, ticker symbol CRM, has fallen on hard times as the e-commerce boom fades and as macroeconomic challenges mount. Last week, CRM held its Investor Day and gave a very bullish outlook and commentary that market participants really appreciated. The main headline to emerge from the presentation is that CRM is targeting $50 billion in revenue by fiscal year 26, representing a compound annual growth rate of 17%, while achieving non-GAAP operating margin of 25% or more in the same time frame. CRM also nudged its fiscal year 23 revenue guidance slightly higher by about $65 million at the midpoint. CRM acknowledged that macroeconomic and foreign exchange headwinds do pose a risk to its growth in the near term. This doesn't come as a surprise, though, as CRM is coming off a rough Q2 2023 earnings report, in which it issued downside EPS and revenue guidance for Q3 and fiscal year 23. During the earnings call, the company disclosed that deals were taking longer to close and that companies were becoming more tactical with their spending. In regard to the foreign exchange market, CRM estimates that the strengthening dollar, and the dollar has been on a tear throughout 2022, has actually created about a $2 billion headwind against its fiscal year 26 revenue targets since its last Investor Day. It's significant, though, that the $50 billion revenue goal has not changed, despite the negative foreign exchange market environment. Although business conditions are currently turbulent, CRM anticipates that a combination of long-term secular trends like digital transformation, cloud adoption, etc., and company-specific initiatives will enable it to reach its fiscal year 22 targets. Towards the top of the list in the company's land and expand approach and its large and expanding total addressable market, or TAM, currently customers using 4 or more clouds, sales, marketing, commerce, service, Slack, etc., represent 20% of CRM's total customers and drive 80% of its total annual recurring revenue. And I absolutely love companies with recurring revenue. The company believes there still is plenty of room for multi-cloud adoption growth as adoption and use cases increase. The total addressable market also expands, with CRM projecting its total addressable market to grow at a compound annual growth rate of 13% between 2022 and 2026 to a staggering $290 billion. Now, one product in particular that's fueling strong growth is Salesforce Industries. This offering provides a suite of 12 industry-specific clouds that are tailored to help enterprises modernize and lower costs within those individual industries. This product alone is generating $3.8 billion in annual recurring revenue as of July 31st, 2022, while also achieving 30% higher average selling prices than CRM other cloud products. In CRM's Q2 earnings report, it guided for fiscal year 23 non-GAAP operating margin of 20.4%. In order to reach its target of 25% or more in fiscal year 26, the company intends to lean on operating leverage from a few different areas. A significant source of operating leverage should originate on the sales side, as CRM expands its self-service capabilities and as sales rep productivity improves. Additionally, the automation and optimization of workflow and processes, combined with the evolution of CRM's real estate footprint, should fuel G&A leverage. Lastly, the company is aiming to drive non-GAAP sales and marketing as a percentage of revenue below 35% by fiscal year 23. For the 6 months ended July 31st, that figure stood at 45%. So they've got 10% of work to do there. Now, the main takeaway is that while the near-term outlook remains cloudy, no pun intended, due to macroeconomic factors, CRM is poised to generate solid growth over a multi-year horizon. As the company approaches $50 billion in revenue by fiscal year 26, margins are expected to push higher on improved operating leverage. And that is what investors are so excited about. So let me know, what do you think about CRM? Let us know in the comments below, as your comments help us all to better understand. Okay, do me a real quick favor. Click that like button, share this video with a friend, and join our investor community by clicking the first link in the description. You'll get instant access to weekly expected moves, numerous trade setups, top 10 stocks in 4 different categories, economic and market insights, and a private Discord server, all to help you along your investor journey. So click the first link in the description to start gaining the knowledge to become a better investor so you can achieve financial independence. Oh, and if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.